Hey, what's going on, guys? Welcome back to the channel. In today's video, we're going to be talking about Ethereum and its price action versus Bitcoin, as well as USD. Remember to leave a like for this video and subscribe to the channel. We're almost 12.2K, so thank you guys so much for that. And also check out Cyphers.io, my web development studio, to help you build your site, dashboard, a whole Pulsing block explorer, business page, whatever you need, very quickly, very beautifully. Link in the description below for that. So let's get right into Ethereum USD. This is the chart. It's probably a very familiar chart for many of you. It's existed since 2015, and this is a log scale on a monthly time frame for ETH USD. Ethereum has struggled this cycle. You could say it is behind in regards to the time component of the traditional 4-year cycle theory. Whereas Bitcoin, on the other hand, has been doing very well. It's been doing very well this cycle. It's been Bitcoin only season for a while now, but this is nothing new. Let's see if we can get Bitcoin here. Hide my drawings and show you guys what I mean. It's already at 104K, whereas its previous all-time high was around 70K or so. That's 60% higher. It's been doing really well. And if you look at Bitcoin dominance, well, that's just been going straight up ever since September 2022. You could even say since May 2021, right? The actual Bitcoin USD top. But Bitcoin dominance bottomed out right here at around 40% and is pretty much just been going up ever since. If you look at Heiken Ashley candles, you only have one red candle and it's just been pretty much straight green. Kind of like the PLSX to PLS ratio chart, if you've seen that one. That one actually is all green, doesn't even have a red candle. But the fact of the matter is, if you go to ETH USD, it is not at all-time highs. It's not 60% above all-time highs. It's not even at all-time highs, right? If it were 60% above all-time highs, like Bitcoin is now, 50 to 60, then Ethereum would be $7,000 or $8,000, but it's not. And this is highlighted by the ETH BTC chart. And we'll get into that in a little bit, but I want to show a few things that I saw on this chart that I feel like not many people have talked about or mentioned. And specifically what I mean is looking at the monthly time frame, including the RSI in our analysis, and looking at, what do I have drawn? Just this? Well, this is one to look at too. But what I wanted to get at here was the idea that we had a bottom for Ethereum here, our first bottom. The drop from 1,600 down to about 80 bucks, 95% drop. What did RSI do? It crashed beneath the 50 level. This green level is the 50 level on the relative strength index. And then we went from $80 or so all the way to almost $400, which was about a 4 to 5x. Really good move. Do you see the parallel yet? And again, this is a more elongated version. You might see it in a second here if you don't see it yet, but we had our top, right? We had our top. We didn't dip 95%. I believe we dipped like 80% or so. Found our first low. And then what did we do? We ran up 4x, a little over 4x, right? 4 to 5x. Same as this, right? This was $80 to about 400. This was about 800 to about 4,000. So just 10x higher, and a much longer time frame. On a much longer time frame. Over here, December 2018 to June 2019, it was about a 6-month run, 4x before we came back down. Back here, it spanned across 2022, 2023, and 2024. So about 2 years, not just a 6-month easy, 4x, and then we come back down. This took about 2 years. This is grueling because a lot of people thought it was the start of this, the start of only up, but it wasn't. All right, what happened after we ran up our 400% or so? And just to make this cleaner and actually clearer and cleaner, let's just include some date and price ranges. 350% over the course of 6 months versus 360%, right? Almost the exact same over the course of 2 years. All right, so where are we now? Well, it's anyone's guess, but there are some things we can look at. Again, this is all speculation. This is all just looking at patterns that have occurred in the past. to try to give us some insight into what could statistically happen in the future. It's all just statistics and math, okay? Not financial advice. So we found our top, and then we came back down to the lows. Now, we didn't come back down to the actual low of $82. This wick only went down to $92, but more or less, we revisited this sort of bottoming region. What did we do over here? We dipped down and revisited the sort of bottoming region. Again, it wasn't exactly a double bottom. It was actually a higher low, but guess what? So was this March 2020, right? Pandemic dip crash, or pandemic dip right here. Looks similar. And now let's compare the dips. 75% down over 9 months. Here, over 13 months, about 67% dip. So the dips aren't as pronounced. For example, this dip was 95%, and this dip was only 82% or so. So the dips do seem to be getting smaller in the long term, and these sort of sub-cycles seem to be lengthening a bit. So we revisited our lows, technically formed a higher low, and then it was go time. So what did we do? Technically formed a higher low over here, and we've had 2 green monthly candles. The one for May just closed a few days ago here, and we had 2 monthly green candles, and it looks quite similar over here, right? We had a gnarly wick down revisiting the lows, technically forming a higher low, higher macro low, and then 2 green candles, right? One big one, one recovery one, and then a little one the next month in red, and so on. But from here, from about April, May 2020 or so, it was pretty much just straight up for about a year, if you count this as the top here in May, but the actual technical top I know was in November, so you could say it was straight up for a year or a year and a half. So I mean, it looks very, very similar, and I think where a lot of people get not caught up, but I think the reason not many people have looked at it this way is because this move here happened so quickly and came back down, versus this move over here came up very, very slowly. Again, 6 months back here versus 2 years over here. It's very grueling. It's very painful, right? When you think you're in a certain part of the cycle, but you're actually in a different part of the cycle. But I do think there are parallels, even though, this run obviously didn't reach all-time highs. This one reached very close to all-time highs. And again, it was very quick and whatnot, versus this one was very slow. So there are obviously some key differences. Even the RSI reflects that, right? Let's get into the RSI a bit. Look at this high right here. It barely crossed the 50 level on the RSI. So this intermediate high, mid-cycle high, if you will, intra-cycle high, whatever you want to call it, not a cycle high, but something more localized. That high only reached 51, so barely crossed above the 50 level on the RSI before coming back down to it. What did we do over here, right? We went all the way up to 70, but ultimately we came back down beneath it. Twice over here. And there is a scenario in which we do go low again and revisit these lows. So, like over here, look, right? After coming back down beneath the 50 level, we had one low, came back up, got rejected, and had our final low. Over here, we've gone down beneath it, had our first low. We've gone to it. We actually didn't get rejected by it. This one got rejected by 49.54. And we actually are already at 50.96. This could go down this month, obviously, and it would be a rejection from 50.18, for example, if we closed the month at like 48 or so. Then I think that's technically close enough to be able to call it something like this, where we could have one final low before we run, right? I think we should look at the ETH BTC chart here soon, because again, so we can either have one more low and then run, or it's more similar to this region over here. If you can tell, let me zoom in a bit. Let me show you guys. Where price got above it. It actually found support around that level, around the 50 level, and then we ran. So we're above it now, right? If this month can close strong, next month maybe we correct a little bit, And then from there on out, a year of straight up would put us about mid 2026, right? And, there are important dates in 2026. The Fed has obviously been very slow this cycle at cutting rates and easing off on the quantitative tightening. But for example, July 4th, 2026 is the 250-year anniversary of the United States. So, that's getting into a little bit more event-related, news-related, potential psychological tops. But I mean, I could definitely see a July 2026, a huge celebration, right? Everyone's stoked about the 250th anniversary of the country, and everyone's euphoric, and we're reaching highs. Like that's not a hard reality to envision, where people are just very bullish, very happy, euphoric, and that could mark the top. And it would align with something like this, right? Mid 2026. And it would also align with the idea that this cycle has been offset more or less. Some people argue it's a left transit cycle and we've already topped and the bear's in. I'm not necessarily of that mindset for a few reasons. One of them being Bitcoin dominance. One of them being, I'll show you here in a second, on ETH/BTC is actually this ticker right here, WALCL Federal Reserve, which more or less speaks to the quantitative easing or quantitative tightening of central banks. Now, there are a few things to look at here, because in the first cycle of Ethereum, where it was finding its initial capitalization versus Bitcoin, right? This is ETH/BTC. We actually went up a lot, while this curve, this green curve, was pretty much just going flat, right? This green curve is just flat here. So it's not really quantitative tightening. It's not quantitative easing where this curve is going up or down, but it's flat, right? And Ethereum did really, really well during that flat period. And again, you could argue it's because it was its initial capitalization cycle. Bitcoin is at the tail end of its run to 20K over here, and Ethereum just piggybacked off that. Sure, you could argue that, and there's definitely validity to that. If you look at the next cycle, right, when this green curve bottomed out, that was pretty much the bottom of ETH/BTC at 0.017. And notice that we topped out more or less around the level that this green curve topped off as well. And ever since, we've been in a quantitative tightening scenario, right? This has gone down. The green curve has gone down. Notice how so is Ethereum. This has gone down. So is Ethereum versus Bitcoin. They're pretty well correlated this time around. So I guess the real question is the Fed going to slow down quantitative tightening or start quantitative easing? Now, starting quantitative easing might be a bit far off, but slowing down quantitative tightening has obviously already started and it's been happening. If you notice the curvature of this green curve, right, you go down really, really steep and then it starts smoothing out and it starts curving, right? Almost that U shape that we're looking for. So it might not be a situation like back here in 2020 where we just, V bottomed and then started printing money like crazy. It could be a situation where we just flatten out for a bit. I think that's the most likely scenario, that this green curve flattens out. But again, if it's flat, we've seen that ETH/BTC can still have good runs versus Bitcoin. And the reason this is important, ETH/BTC, is because it acts more or less as a proxy for alt season. All right, that's when other coins tied to Ethereum or with higher risk profiles in Ethereum can actually start running more because there's excess liquidity in the market. Ethereum is overvalued and everyone's having a good time. So that's sort of my take. I know I went a little more towards the the macro route, but it's all very important. And I just wanted to touch on Ethereum a bit, on where we could be, right? If we have one more dip to go, if it's go time, if it is go time, maybe we just go up for a year and a half or a year. And that would be great for, everyone holding Ethereum. And we saw ETH/BTC, it's pretty much revisited these lows from back here, right? More or less, even this wick right here. So could we go lower? Sure. Obviously these highs have been getting lower. However, we have maintained an uptrend on the lows, which if you're an Ethereum bull, I'm an Ethereum bull. You want to see that you want to see that hold. You want to see that hold. You don't want to have these levels as resistance coming back up if you go beneath them, right? And, you know, if you look at how much, get rid of this for a second, how much these dips have been, it's actually really interesting to see these clean numbers. 89.4%, that is close enough to 90% for me, right? Because this is Kraken, and obviously if you look at an index, it might be 90%. This dip, 79.99%, 80%. I don't know, man. It's something about these clean, even, round numbers. The psychology of markets seems to love that stuff. So an exact 90% dip over here, over 822 days. This one was an 80% dip, almost exactly to the basis point. 79.99%. I still can't get over that. Over 1,217 days. Could that be the bottom? I mean, I sure hope so. I sure hope we don't go lower. It looks like a nice recovery, right? We already recovered all of this month right here, a little bit of this one, and there's a long way to go to get back to these highs, or, you know, even lower highs. But at the end of the day, if Bitcoin reaches 150K this cycle and Ethereum only goes to like the 0.06 level or so, that's still $9,000 Ethereum, right? So that's sort of my take on the market, guys. There's obviously a lot more to talk about with Ethereum, but this was just sort of a different sort of take to look at the similarities between this sort of long extended intra-cycle top versus the one that happened in 2019 very quickly, and this one was obviously very extended. The dip, how it's very similar. We revisited these lows. We are on I was thinking about another chart. Sorry, I was gonna say we're on an uptrend, which we are technically, right? We revisited these lows, and yeah, the percentages are obviously less pronounced in terms of dips and whatnot. So that's sort of the take. I'm kind of repeating myself at this point. So I would implore you to go check out these charts yourself, maybe confirm my findings or find your own sort of new discoveries in the chart. You can learn a lot by just staring at a chart. You know, you don't want to do it all day, obviously, but, you know, a little bit of math, a little bit of analysis, an observant mind goes a long way. That's pretty much it. I appreciate you guys watching the video. Remember to leave a like, help us reach 12.2K. We're about 12.15K right now, so about 50 more subscribers to go. Appreciate all you guys watching. Check out Cypherus.io. I'm going to start a few more builds here, actually, so get in before it gets a little busier and I might raise prices. I have like I have about like 4 or 5 things that are in the mix right now being built. So, you know, get in before we get super overwhelmed. A lot of it is just me, but we make the time for these things. So again, thank you for watching. Check out Cypherus.io. Link in the description below, and I will catch you in the next video. Peace.